So thank you again for sharing your perspectives. And we are going to start with the headline for today as a big one, especially with the folks that we have here, and you're welcome to put it just in the context of that short-term or long-term outlook that we're here to hear about. But today is the first day of the federal government shutdown, and Tom in particular, since we have you here and you do sit on the Federal Open Market Committee, which is scheduled to meet at the end of this month for its next rate-setting decision. I do want to ask you, how does that impact or not impact the short-term outlook for the FOMC? Particularly, does it make a difference in terms of the data that you'll receive this month for that decision?
Sure. These shutdowns happen. Some last a long time, some last a short time. I think you have to be wary of making any, big, broad conclusions about what may or may not, be a big deal. But the one thing that I do care about is the data. In theory, we're getting a jobs report Friday. In theory, we're getting jobless claims tomorrow. But if the government shut down, we're not getting those. And so that's an issue. What we do in our bank and what I spend all my time doing is things like this, because I love the chance to talk to 15 or 20 or 25 people during the meeting or after the meeting and try to understand, what are you doing with hiring? What are you doing with investing? How's your demand? What are you doing with pricing? Those of you who are increasing prices, I'm trying to talk you out of it. That was supposed to be a joke. And I think we're just going to have to go to those kind of data sources. I mean, it's going to be, ADP did a jobs report this morning. There's private sector people who are out there. But I just think the outreach that we do is even more critical at times like this.
And we both mentioned in terms of headwinds and long-term impacts and paying attention to that versus short-term impacts. Do you see anything for the rest of this year in terms of what the shutdown might mean for the markets or for the economy?
I think at the local level, to me, I mean, again, I come back to the notion of relative exposure. I don't view us as a hub for a lot of federal workers. I don't see us as a hub that's going to feel this immediate impact. Now, if the consumer were to interpret the shutdown as potentially meaning something negative for the economy, I think both Tom and Brian hinted at this notion of uncertainty and how it trickles down to consumer spending. I would certainly be watching that because we're obviously at the forefront of a lot of consumer spending. So I would see that angle to me is probably the most sensitive locally.
Sure, okay. And for the markets perspective?
Yeah, I'd say for the markets, we've actually looked at this at Bank of America for past incidences like this, and you might have a very short-term move in the markets or in rates, but almost always in every single circumstance on the intermediate term, meaning 3, 6, 9, 12 months later, it had no impact. So it's a very short-term event.
Okay. And we do have an audience question at table 10 from Riley James.
Hi, so I had a question primarily for President Barkin and Mr. Daley. You both mentioned, I believe, the household balance sheets and relation to consumer spending and how consumer spending is at a good level compared to higher household balance sheets. That's pretty highly dependent on high housing prices, but as Dr. Guettabi mentioned, that housing supply is going to need to increase in the aggregate to keep affordability for Americans. Do you think that if housing prices increase, if housing prices decrease, do you think that could cause a decrease in consumer spending, driving down that bastion for our GDP?
First, no.
Well, I actually don't think it's so dependent on housing prices. Half the economy has houses, but the other half doesn't. I just look at the underlying dynamics for consumer spending, and I start with, do people have a job? And I think if you don't have a job or you're worried about your job, you're going to cut back on your spending. But if you have a job, that has you leaning forward. The second question to ask is, are real wages going up? Are wages going up faster than inflation? That's still happening. And so people have jobs and people have a little bit more money every year, and that also is supportive of spending. And then I think the equity markets, honestly also matter, and there's a wealth effect that's created. You could take that logic and include houses. By the way, I don't see a sign that housing prices are about to collapse, but you could add it to that. But we are seeing some increase in home equity loans. We're not seeing giant increases in them, and so I'm not sure that's being monetized quite the way it was, let's say, 20 years ago.
Yeah, I would say from the market standpoint, they're looking at housing as very neutral, right? If you put all the factors across the board and say, is it positive, neutral, negative, they're looking at housing as neutral, and I think it's going to be, it would probably be a low probability event that you'd see a significant decline in housing, just given those underlying supply-demand dynamics. And I know real estate is local and regional everywhere, but in general, and correct me if I'm wrong, Tom, but nationally, right, we still have a undersupplied housing market.
Yeah, for all this, you're still seeing house prices go up year over year nationally.
Okay, and table 6, Natalie English.
Thank you, Tom and Brian, for coming back to Wilmington. We love having you both here. Mouhcine, this question, well, it's kind of a question. It's kind of a soft layup for you, too. You did a phenomenal job of reminding this room, and you've also done this on LinkedIn. If you're not following Mouhcine and Tom and Brian, I'll start following you as well. They do a super job on LinkedIn of helping us with this data and giving us information. I love the post. Mouhcine, you keep reminding us that our economy is not overly hospitality and leisure. Now, I'm grateful for that part of our economy, and of course we have beautiful natural resources and assets. And yet, we still have leaders of all types in this community and region who believe that it is. So what do we need to do to help them see not only the diversity in our economy, but then also help us to invest in the things that will help us bring along people in our community who are looking for the ways to get employed in all of those other sectors?
Yeah, no, I mean, I think it's an important comment / question. I think one of the reasons I refer to it as a myth is because it's pervasive, right? And it influences decision making. So to me, it's better communication of the facts. We're going to start releasing a newsletter, essentially making sure that people are aware of the makeup of the economy. And I think efforts like your organization is doing with the university about improving the supply of healthcare workers, for example, ensuring that we understand who are the superstar companies, who's hiring, what are the skills they're after, and making sure that there are coalitions that you're building, that you've already built, that are working behind the scenes in order to play matchmaker. For us as a university, we need to have a better understanding of where the local demand is. You saw that big bulge in 2024. I want to keep as many of those people here, and obviously we want to make sure that they're getting employed at a lot of the high-paying companies. So I think that efforts are underway. We just need to understand that economic growth, you guys were eating, so I didn't want to say this, but I really think about economic growth a little bit like adolescence. It's exciting. It's really awkward. Comes with acne sometimes. Requires parental intervention, right? So what does this have to do with economic growth? It has a lot to do with it because economic growth is also exciting. It's awkward, right? Traffic, prices increasing, and may require some policy intervention, right? And so that's where I'll leave it.
Since we are talking about sectors right now, one thing that I did think was interesting was the statistics in terms of healthcare wages as the percentage of our growth sector here. And when we're talking about industries that may or may not be vulnerable to industry changes, policy changes at the national level, or even state level, another headline today is that North Carolina is cutting its Medicaid rates to providers because of an impasse in Raleigh. So my question is kind of both at the national but local level too. If we've experienced this much growth in the wages and that part of our economy, do you foresee that growth continuing in the future, or do you see a slowdown there as well?
I can start. I mean, healthcare, both at the national level and at the local level, has been the fastest growing sector for the last few years. It has, in a way, helped the economy remain afloat. At the local level, the fact that we're aging really fast, obviously Brunswick County is right next to us, means that demand is not going to go anywhere for healthcare. And we are a healthcare shortage area, so we still need physicians, we still need nurses. So there is the demographic story, there is the fact that people who are moving here have a lot of resources. We're living longer, which means demand for healthcare is going to continue. In New Hanover County last year, there was about $380 million Medicaid dollars that flowed into the region. So there is obviously some question about the extent to which that may translate into some sort of a slowdown. But I think that if you're thinking about bullishness or bearishness, I'm very bullish about the healthcare sector in general. Now, whether we'll continue growing at the rates we've seen over the last couple of years, unclear, but I think we're going to continue growing there.
Nationally, I just say all the dynamics are exactly as just described. We're getting older and we need more healthcare. So demand is there. We don't have enough healthcare workers. We're short nurses. We learned that powerfully during COVID. And so the demand for staff is there. But there is an ongoing debate about how all the healthcare we need is going to get funded.
Yeah.
And what part's going to get funded by the government, what part's going to get funded by the corporations, and what part by the individual, what profits will be made by various people in the chain. That's a very real debate that's going on. That's different than the, if I could call it, the demand for the healthcare sector, which I think is driven by demographics, if nothing else.
Okay. And table 13, Chris Capone has a question.
Thank you, gentlemen, for your insights this afternoon. My question's in regard to the issues we discussed here locally, more about the potential labor shortages in the talent pipeline and also for the affordable housing. What do you foresee as maybe some of the low-hanging fruit or quick wins, if there are any left, and versus some of the longer-term systemic changes that we need to look at?
Thank you, Chris. I think that addressing NIMBYism in a way that is productive is really important, right? And so people have very, very strong feelings about density, but density is part of the solution, right? And so I don't know how you bring them to the table, because I think one of the things that we need to do better is get people to understand that if we're building, we're just not building for building's sake. We're building because our economy depends on workers having an affordable place to live. Half of New Hanover County workers live outside of the county. Will that potentially get even worse if we don't address this? So to me, it's building upwards. It's leaning in on density. And from a labor market perspective, I think we really need to double down. We need to fund some of these coalitions to better understand what companies like yours, what are the skills you're after, who are the people you're trying to hire, because I think that the data is not going to tell us the full story. I like what Tom says. He travels a ton. He talks to people. I think we need to have a lot more of these conversations of where the demand is and what are the skills that are needed. That way we can play better matchmaker. But I think that every time I see a headline about housing and about whether or not we need to build, I feel like it almost always lacks context of these are workers that support our lifestyle, our area, and there is no going around building because demand is going to continue. So if we ignore it, the issue just becomes more difficult to deal with going forward. And so to me, we have a really great opportunity because growth has, air quotes, slowed down. So this is the time to try and actually lean in and do as much as we can so that when the next wave of fast growth comes, we're better prepared for it. I showed you way too many charts, but if you look at housing permits, we essentially did not build very much for a decade and then started building now. So people do indeed see a lot of construction, but it's construction that's well behind the eight ball. And you can't look at permitting activity or construction and simply say that's too much unless you understand how many more people are living in the area. So I think it's communication and it's linking it to quality of life. Even if you don't care about apartments, your quality of life is affected by whether or not we have a labor force. And therefore, you're going to need to accept some of the changes that are coming because change is coming irrespective of how people feel about it.
And I think economic development in general has changed. And if we go back to the theory of economic development was really built in the 90s when demographics and immigration and women more fully participating in the workforce and people living longer and being healthier and working longer meant that we had a lot more workers than we had jobs. We're in a different world now where because demographics is going the other way, immigration is going the other way, the baby boomers are retiring, fertility is low, we're going to have more jobs than workers in most places. And so economic development is now should be less focused on, we've got to go get another employer who has a lot of jobs, and more focused on what are we doing to make this place a place for employees, I mean. And, if you kind of go all the way back, the last time we had this situation was the 50s, where a whole generation of employees, died in World War II. And, you had a bunch of workers who were employers who were short workers. And that's where we had company towns, and that's where we came up with, employer-paid health insurance and pensions. I'm not suggesting we're going to go back to those, but there's another version of that, where you sort of wake up in the morning, you say, our real issue is workers who have the capability and quality and training and skills. And we're going to have to invest in that in a totally different way than we had to 30 years ago, when a bunch of people cut out their training programs and cut out their pension, cut out a bunch of the stuff that they had put in 30 years earlier, because they didn't have to. And I think we may have to, as employers and as communities, be thinking a lot more about how do we attract the talent, as opposed to just how do we attract the jobs.
And Jason from Table 10 also has a question about labor.
Hello, can you hear me? This question is for President Barkin. When it comes to interpreting labor data, how big of a threat is falling survey response rates and increasing labor revisions? How does this impact the Fed's ability to evaluate the true state of the labor market?
Well, it'd be great if all the data came in on day one and it wasn't revised 3 times. So that'd be better. But we live in a world where it comes in a month late and it's revised 3 times, and people are not filling out surveys the way they used to. That's true for pollsters too. I mean, it's people, and in part because you don't answer your home phone if you've even got one. And so it's harder to find people respond slower. That just is what it is. And you just have to make do with the data you've got. One thing I was telling somebody the other day is the Federal Reserve started in 1913. We started before all this data happened. So, you find a way to work it. Like I said earlier, you can use some private data, but importantly, you have to talk to people in the economy and figure out what you can figure out. And I have always used that to supplement the data, because as I said, it comes in a month late and it's revised 3 times. And there are times where you get it and you say, this isn't consistent with what I'm hearing. And there are times where it's reinforcing. So, great data is good, but if you don't have great data, you have to figure out what you're going to do without it.
Okay, and Grant at Table 44.
Hello. Professor Guettabi, I had a question for you. We talked about growth in sectors like construction and healthcare and the Fed's efforts to balance inflation in the labor market. But from your perspective, what's the most underappreciated risk and or opportunity in the economy right now that business owners and communities like Wilmington should be paying attention to?
It's a good question. It's a difficult question. I think I talk about it a lot, but I feel like there isn't a real appreciation for just how much richer the area has gotten. And I've mentioned this statistic before, but if you use IRS data, you find that, for example, in Brunswick County, there was an injection of about $500 million in the span of 1 year just through domestic migration alone. And I don't think that we have a true understanding of how the change in demographics and the injection of money is changing the demand for services in that area and in New Hanover County specifically. The bad joke that I typically make is I live downtown and I walk on a Wednesday and Seabird is packed, and you go, what in the world do these people do for a living? And then I remember, oh, we are right next to Brunswick County. And so, no, but I really think it's a better understanding of, it's a better understanding, I mean, invite me next time you go to Seabird, but no, but it's a better understanding of just how much wealth there is in the area. And again, what are the services that are going to be consumed by this new audience that I don't feel like I have a grasp over yet. I really have these aspirations of creating a survey of new incomers trying to think creatively about getting a handle, especially if they're not in the labor market, of how they're spending their time, how they're spending their money, and what are the potential sectors that, other than building pickleball courts, I can't think of, a specific business plan. But.
And Brian, from a broader perspective with the markets, what are you also seeing with sectors or the ones that have the unappreciated risk or opportunities, like Grant says?
Yeah, I'll go back to You're going to continue to read more and more about AI and all the hundreds of billions in CapEx spending, but that's also going to, I think, help spur additional areas of CapEx spending across other sectors and industries. It's going to be around power generation, right? Our electric grid hasn't been upgraded in decades, and now all of a sudden we have this whole new demand source coming onto it. You needed upgrades as is before AI, and now you have AI coming in. What does that do for the demand for welders, electricians, electrical engineers, materials like aluminum, copper? The infrastructure that will be built around this is going to be massive, and it's going to, again, take years because these are longer cycle projects, not short term, and there could be a bit of a mismatch on some of that skilled labor, right? Is it in different parts of the country? Is it where we need it? Do you have job migration, like you've mentioned, what you've seen locally? Does that happen to where the demand is? So there's a lot of moving parts in there, but I think you're going to see an uptick in CapEx, investment, and earnings in other sectors like utilities and power generation, right? Nuclear power is now back front and center again. Electrical, industrial components and equipment, all the stuff that goes into welding and electricians' work. There's tons of power regulation equipment that's needed, voltage regulation equipment, all this boring stuff that would put you to sleep, but no one's talked about it in decades, and it's going to be front and center. So it's going to come across some of those older cyclical areas of the economy that should see some more activity and higher growth than past decades.
Okay, and to wrap us up before we run out of time with you gentlemen, can you quickly tell us one outlook, takeaway, that you think people should walk away with today, starting with you, Tom? Just one of the whole economy.
You know, if consumers have jobs and wealth, and businesses are making record profits, and stock prices are high, why are we all so worried?
Well said, and I'll back that up with that data I mentioned earlier from Bank of America and what we're seeing in consumer spending with 70 million households that we have data from. I would say that's analogous to Tom going out and talking to companies, or me or some of the equity analysts talking to companies. The other side of that is the consumer, and we have that input from the consumer, and they're relatively healthy.
Individuals, like businesses, are footloose. Quality of life, quality of life, quality of life, and a big portion of quality of life is affordability.
Thank you very much. Thank you for your insights, and we appreciate you joining us today.
We'd like to thank all of our speakers again for being here. Thank you, UNCW and the Swain Center, for partnering. And I want to let you know the Experience Hall is now open. Make sure you take a picture of yourself on the top of the infinity structure. Thank you. Thanks a lot.